All right, Sarah, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the future of the rally is some major events loom, especially large. The Fed decision and mega cap earnings all on tap today. We'll trade all of that with the investment committee. Joining me for the hour today, Joe Terranova, Steve Weiss, Jim Lebenthal, and Bryn Talkington. We are right now green across the board as we anticipate all of that. Well, the Dow is unchanged, and the Dow's stalking a new high. The S&P and NASDAQ have been there. The Dow needs to cross 45,073 to get there. We'll see what happens. The big debate, of course, is whether this is the pause that refreshes or if the market needs to consolidate a little bit more before going higher. Joe, speaking of resting, exhaustion, pause, words that you've used. The S&P has now gone 24 trading days without a 1% move in either direction. That is the longest stretch since October of 2024. Today, BCA Research upgrades equities to overweight, and they put a 6,950 target for year end. Address all of that.
Uh-oh. The expression is you never sell a quiet market, and that's exactly what we have right now. What else plays against the thesis that we're kind of running in place and that you probably don't want to be aggressively adding to existing positions right here is that when you look at the Mag 7, and obviously I am studying the Mag 7 and other large cap U.S. companies quite extensively right now as we move toward the end of the month and the rebalance. But the ETF, Mag 7, yes, the Mag 7 is in a position reflecting momentum as strong as I have seen it since the fall of 2023. So if I take each individual Mag 7 name and say, okay, let's assign a momentum score to it, right now, all 7 Mag 7 names have a positive momentum score. Apple is probably the weakest, but we have not seen that broad momentum participation from the Mag 7 since the fall of 2023.
But they have the kind of score that you are inferring, so they're going to remain in the ETF barring a surprise. Well, you can't necessarily say that.
Well, let's wait a second. Amazon is not in there right now. Alphabet, not in there right now. Microsoft, not in there right now. So we hold 4 of the Mag 7 in the ETF right now, and all I'm saying is we look at other factors besides momentum. We're also going to look at the quality nature. And in certain instances, you are seeing revenue deceleration. But the momentum, the score on the momentum for these Mag 7s is pretty darn strong.
All right, we'll read between the lines until we get more information on that. And we'll get to the conversation about the Mag 7s because Meta, Microsoft today, Apple, Amazon tomorrow. But we have bigger things to discuss before we get to that, Weiss. The pause that refreshes, or is some consolidation in the cards? Again, I mean, when you've gone 24 days, almost a month, without a 1% move in either direction, that sort of gives you an idea that there's been a resting period in place for this market. What breaks it?
Well, look, I think it's necessary to have the perspective of what happened up to that point. And up to that point, early on, you go to April, we had a major decline, and that was a series of 1% corrections in a row, bang, bang, bang. So now we're sort of like, you got to take a look at the average over the year or 6 months, pick a time frame, and I'd say we're right in schedule. So in terms of 1% corrections, we've had them, now we're digging out of them and going higher. Look, I don't really buy into the phrase the market is tired. Market's an inanimate object. It's without catalyst right now. So you need a catalyst to break it one way or the other. That catalyst could be, I assign a 10% probability to the Fed cutting today, actually. I would have a 50% probability, and I think it's actually unlikely, 10% is just to have some probability. If we didn't see the assault on the Fed, the Fed should cut, but right now they have to protect their independence, so can't count out to that. However, I do believe you'll see more than one dissent, which is very rare, and that September or sometime next few months, next 2 meetings, you will see the Fed cut.
Well, to your point, Nick Timiraos at the Journal today says you could have dissents potentially by Waller and Bowman together, which would mark the first time in 3 decades that more than one Fed governor dissented at a policy meeting. That is sort of what's at stake today.
Yeah.
Let's just bring in Steve Leisman now, our senior economics correspondent. He's going to help us set the table for this decision today. So we have that as part of the backdrop. Is there a dissent? And does a dissent carry the stature, if you will, of two govs, which hasn't happened in some 30 years? The president, once again, on Truth Social, points out the GDP print today, which was 3%, Steve, way better than expected, he said. Too late, referring to Powell, must now lower the rate. No inflation, let people buy and refinance their homes. Weiss says 10% probability that Powell and company cut. What do you say?
As the limit goes to zero, I don't think the Fed is cutting today. I think the dissents by the governors matter. I think there's a case to be made for cutting. But Scott, can I just for a second here? I know the market and you guys around the table are so over tariffs, but I don't think the Fed is. I don't think economists are. There was a report out this morning from Goldman Sachs, and you can write these numbers down. So far, they have calculated, they're looking at the Treasury data and the customs data, a 7.4 percentage point increase in average tariffs. They believe it's going to 14%, which is to say that they are calculating we've only seen about half of the full economic tariff impact that's coming. They think it's ultimately going to a 17% increase in tariffs. That's one of the things I think the Fed is looking very carefully at that is staying their hand. This may be that old song, Scott, see you in September, but it could be October or November before the Fed feels comfortable. You get 2 more months of inflation data, but this tariff stuff is still just working its way through the economy. I know everybody wants to move on, but that's just the simple case.
That's fair. Wolf Research today says there's growing risk of the Fed holding steady for the whole year, Steve, for the rest of 25. I don't think the market necessarily has that on its bingo card. You also have the wild card, if I could call it such, of Jackson Hole, where Jackson Hole usually is not a non-event. And it may carry a special bit of weight this time around, just given the president leaning on Powell, the idea that Powell wants to cut because he said as much. He's only paralyzed, so to speak, by the fact of the tariffs. And the data that you said suggests that the worst is yet to come. We just don't know.
Well, I can just tell you, Scott, I used to do a whole lot more fly fishing in Jackson Hole than I've done the last, say, 15 years or so. It's been a lot more work than it used to be, and don't cry for me. But in any event, I think that's right. Powell does want to cut. I think the board wants to cut. The committee has, on average, 2 rate cuts penciled in. They'd like to get there. But remember, it's not only the data. The Fed and Powell have said this several times. They feel it's their responsibility in what they say and what they do to make sure there isn't more impact from tariff inflation. So what they say and what they do will have an impact on that. They've done a pretty good job of sort of saving Trump from himself in the sense that you have not had a big surge in inflation expectations. You can't at once say, hey, inflation's under control and the Fed's doing a bad job, because those things is a huge disconnect. If indeed the Fed is doing a bad job, you'd have inflation out of control.
Steve, don't you think, though, that, or what do you think about this? There's the narrative out there that inflation's a one-time event. Prior to these trade deals, the Fed really didn't have clarity on what tariffs would be. Now, at least, India aside, and details of the current tariff deals somewhat unknown, but we know at this point that 15% is sort of like the base rate and, in fact, the final rate. So the narrative that it's not really going to be long-term inflation, it's one and done on inflation, and now we have clarity, gives the Fed the ability to then opine on easing and perhaps do it in September.
So I think there's definitely an argument about that, but ask yourself, Steve, the following question. Why are tariffs a one-time price increase? Is it because they're simply on their own a one-time price increase, or is Fed policy and Fed job owning part of what keeps it that way? That's really the key here. Remember when we had the supply disruptions during the pandemic, there was stuff that went up that was supply constrained and stuff that went up anyway because it was an excuse by retailers and manufacturers to raise prices. The Fed wants to see that. So you've had this interesting effect. You have had tariff inflation in the CPI and the other indices. You've had disinflation in other places. That could be because, Steve, the Fed is restrictive. Look, I think they want to get back to neutral. That's a key. And by the way, I have just a quick chart I want to show you, which is showing how rare these dissents are. There's been only one governor dissent during the Powell era. If you go back to 2018 when he took over, president's more likely to dissent, and dissent for tighter reasons. But go back all the way to 1936, which our data do, and you can see governors dissenting, a little more common, and dissenting for easier policy. A lot of that during Volcker, a lot of that during the 60s, when governors were more opposed to tighter policy, and they ended up being wrong.
Well, we'll see what happens today, more so what Powell says and how he answers questions from the reporters gathered in the room like yourself. And we'll look forward to seeing you there, Steve, as always. Steve Leisman, our senior economics correspondent. I mean, Bryn, they could cut 25 basis points is going to make a difference. I mean, I guess it would to the president. They can give a nod to the prez. They can give a nod even to the data. Right? Data's strong, like the president said, 3% GDP, labor market's still good, inflation's not running away again. Maybe it's elevated a little bit here and there. I don't know you'll get that today. Do you even care what happens today?
Well, I don't think they're cutting today. That just doesn't even seem to be on the table. I think what's going to get spicy is after the meeting, what President Trump says about that meeting. And so I think where Powell's in a really precarious spot is that, so inflation, let's say, is around 2.5 to 3, right? The numbers are jumping around a bit. I definitely think it's going to take a couple of quarters till you actually see the impact of tariffs. Because if you go into the CPI data that we just got for June, like window coverings were up like 5% month over month. You have these like items, beef has been up. And so are those tariff related, et cetera? And so we're going to need a few months. But if you go back to Trump's point, it's like Chairman Powell cut rates by 50 basis points in September of last year. Like, why 50? And so to me, when I look at it pragmatically, you have the 10-year at what, 435, you have Fed funds at 450, inflation's 2.5 to 3. It's like it seems tight right here. And so I think where the Chairman Powell is like, we don't want to cut 25 and then stop and then go up and down. They want to start getting into a glide path one way or another, hopefully down. And so that's why I think you're definitely not going to see it. But when you just look at where Fed funds in the 10-year is versus inflation, even if you go up to 3, it's like there's room to start cutting. And so I think the Fed, unfortunately, will make the mistake the Fed always makes is like they're too late because they wait for the data just to be right in front of them. Yeah, no, they know. Jimmy, we haven't heard from you yet. Joe's just gesticulating over here and doing this, that, and the other thing. And we're going to move on in a minute. So, Jimmy.
I'll keep my comments tight.
You know what I'm going to do? I'm going to move the conversation forward to take the Terra Nova variable off the table. That means we're going to move on because if today's a non-event, what is definitely an event is Microsoft and Meta.
I agree.
And you own Microsoft. Now, Alphabet's reaction post earnings wasn't that great, which led Joe in the first place to suggest the market's exhausted. Here was a very good earnings report. Here was not a very good earnings report reaction. Do we get a better reaction from the stocks today if their reports are good?
I don't think so. I think Joe and I are in agreement on this, and maybe Steve too, that this is a market that's kind of overbought. And that's not a terrible thing. That's not a fatal thing. It's just how much more buying can go on. Joe and I disagree about what the Alphabet price response meant, but let's not do that right now. I think Microsoft will show a very good report. I think they will show enhanced CapEx, probably raise it to keep track with what Alphabet did. I think you have to, you can't fall behind in this race. But this is a market that's heading into the dog days of summer. It is ignoring, at this point, it seems to me it's ignoring all news. Okay, we had the India thing. Steve mentioned it. That's really not pricing into the market at all. The Fed seems a fait accompli. Who knows what they'll say? But my goodness, I mean, just cutting 25 basis points and throw the dogs off your trail. Here's my point. I don't think that there's anything that's going to move this market higher right now. And with buyer exhaustion, I think it just trickles off over the next few weeks. Not a disaster, down 5 to 7%. Joe, you looked askance at me on Monday when I said that, but that happens. That's not a big deal. That's a consolidation.
Steve Kovac is joining us now for what Microsoft has to prove today so that the stock has a better reaction than Alphabet post-earnings.
Yes, Scott, and Jim said it right. Not only should we expect CapEx to go up at Microsoft, it's definitely going to go up. Microsoft has already said as much. Keep in mind, we're coming off their fiscal year of 2025. They're in 2026 right now, and they have to give us new numbers today, even if it's just for the current quarter we're in. And we'll be able to kind of extrapolate that, multiply it by 4, and get a general idea over the next 365 days what we can see as far as CapEx spending from Microsoft. It's going to be higher, but at a slower growth rate, they said, than what we've seen before. And then also on the AI front, you got to look within that Azure number, the Azure growth rate, and how much of that Microsoft is attributing to artificial intelligence. That has been increasing quarter over quarter in general, and then whether or not that Azure growth can keep up. And then some bonus stuff on the AI front. If they're spending so much on CapEx and all this investment that we keep hearing about, where is the payoff? So any color they can provide, which they haven't yet, around Copilot, how well that is selling, what the Azure whole numbers look like there as well. Those are going to be some maybe some surprise numbers we should be looking out for as well, just to justify all the spending that they're going to continue to do, Scott.
Yeah, we'll look forward to that. Steve, thank you for the setup there with Microsoft. That's Steve Kovac. Joe.
So
what do you need to see today so that this does not have the reaction that you flagged for Alphabet, which was concerning to you?
I would expect Microsoft to be very strong tonight. I think you're going to hear the cloud numbers be delivering 14% revenue growth. I think that's good. I think you're going to hear about the relationship that they have, which is a distinctive advantage over others with OpenAI. I think the AI assistant, Copilot, you're going to hear how they're advancing that. They're spending. They're going to increase the spending for sure. They're probably going to come in, Jimmy, somewhere around, what, 18 billion on the quarter. That's, I think, 30% higher from where it was 1 year ago. But with that spending, they're getting the result of seeing an increase in revenue. They're getting the result of being able to have the penetration and the deliverability of AI in various different formats. And I think that right now puts Microsoft in one of the better AI positions.
I'm sorry, got to go back. Why are you so down on the Alphabet price response? Great, it wasn't up 5%, but it's just been trickling higher and higher. Why would that be
What's
a bad?
What's it up since earnings? I don't.
About 4% in a week.
What was it up?
Hang on a second. Steve.
What was it up going into earnings?
No, it was up 20. It was up 20% into the print over the last 3 months.
Why do we? And this applies to Microsoft, and it's an honest question. Why do we have to have an up 5% on a multi-trillion-dollar company? I would submit to you that that's actually unhealthy. That would be a sign of froth. I mean, if the stock does a great report and goes up 1-2% and adds,
but this wasn't just any stock. Okay, you could say on its face, well, it was up 20% into the print, which is great under any time frame, whatever. Not necessarily relative to the other Mag 7 stocks into their own prints, where the numbers were much larger. This also came into an earnings period where there were serious questions about the bread and butter business of search.
And I don't think those answers are fully questioned.
But they
fully answered.
They did beat, albeit by like 2%, but they did beat on the most questioned metric that they had to report on. And it was a rather anemic stock reaction amid all of those questions.
But they haven't removed the overhang of search. People that don't want to own Alphabet don't want to own it because of search, don't want to own it because of what we're seeing in the antitrust, issues that are going on. So given the fact that it was up 20%, given the fact that it continued to move and didn't sell off, which is unusual, right? Because when a stock moves that much without really a compelling
Let me tell you something.
beat,
If they missed the search number,
it'd be a disaster.
The market came in saying, all right, it had a nice rebound from the quote-unquote Eddie Q sell-off. Now let's see what happens with the number. If it was going to show up, search, it was going to be in that quarter. That's what Gene Munster and others had suggested. It did not. They beat, and the stock's reaction wasn't horrible, but it wasn't maybe what you're used to. Now we turn to Meta and what they have to prove. So they don't have the same kind of reaction. Julia Borson joins us now to look at that. Hey, Jules.
Hey, Scott, that's right. With Meta's stock up by half in the past year and 86% of analysts rating it a buy, expectations are high, despite the company's potentially slowing revenue growth. Now, revenue growth is projected to slow to 15% in the quarter from 16% in the prior quarter, but the company's spending on AI could be the big headline. This morning, Zuckerberg writing about his new focus on personal superintelligence, driving the investment of hundreds of billions of dollars into compute and, quote, the most elite and talent-dense team in the industry. Now, this comes on the heels of the company investing $14 billion into Scale AI. Bank of America just writing that Meta's generative AI investments have improved its ad business and, quote, further confirmation that AI is contributing to revenue acceleration at a giant company using AI could, in my view, the analyst writes, trigger a global rally in all things AI. So now, Scott, we're going to be watching to see if Meta changes its AI expense guidance. Back to you.
All right, Julia, thank you for that setup. That's Julia Borston out Los Angeles for us. Weiss, one comment on Meta. What do you think?
It's a winner. I'm staying with it. Zuckerberg's doing a great job, and why would I sell? I think personally that the narrative about they're spending so much on AI is old, tired, and it's not going to impact the stock one way or the other.
Well, we've focused on the chips as a result of the big numbers, like the one that Kovac and Julia Borston just showed us, because what they're spending. The SMH hit a record high. 9th positive week in the last 10. NVIDIA's pacing for its 10th straight weekly gain. Bryn, that's probably the second place we're going to look after the numbers come out tonight. After you see what Microsoft and Meta deliver, you're going to take a peek and you're going to say, okay, what's NVIDIA doing? Because 80 billion plus of what these companies are spending or thereabout is funneling to that company.
Yeah, and then you have, also with NVIDIA, you have China is now arguably a positive now for NVIDIA. And then these companies, I've said this quarter after quarter, I think for the last year and a half, these companies are giving you a sneak peek in what NVIDIA is going to do because they still have pole positions. And so I think that NVIDIA, I think Broadcom, there's a few other ones that are really in that great spot of growth. And so I just think that they are spending money on these chips, on these GPUs. But I do think with Meta, with Microsoft, with all of this spend, I think we will look back in a few years and they won't have actually spent all of this money. Because what I continue to hear locally, as well as when you read about it, is there's an electricity shortage. And so I'm going to question in a year or so if we're going to be able to stand up these data centers at this rate because of the issues around electricity and power around that.
So Qorvo beat, speaking of chip stocks that have done well, Qorvo beat, Teradyne is up. There's no ownership, but they did have a Q2 beat. Qualcomm reports after the bell tonight. Speaking of sleepy things within this market. Slumbering.
Yeah, okay. I like that. It is kind of sleepily going higher, but not meaningfully higher.
Sleepily going higher?
Look, I am waiting.
Let's look at a year-to-date on this too, folks, please, not the intraday.
I am waiting for the quarter in which they say we're going to do an accelerated share repurchase. We're going to buy back $20 billion. I don't know that it's this quarter. I do know that it's overdue. This is a company with effectively no debt on its balance sheet. It makes tuck-in acquisitions. It bought AlphaWare. That was last month, or at least announced it last month. But it doesn't seem to be in the market for some huge overpriced acquisitive mindset, and I'm glad about that. But they're generating a lot of cash flow. They're going to show the continued diversification away from smartphones and into automotive and Internet of Things. They generate a lot of free cash flow. Fellas, let's just give it back. Buy the shares while they're cheap. It's 13 times earnings, about a 2.5% dividend yield. Buy back the shares.
Joe's almost gesticulating again.
I mean, I have so many things I can respond to.
I'm going to give him the floor this time.
I mean, he says he's not going to talk about Alphabet, then he brings up Alphabet. So look, as it relates to the semiconductor industry, there is no industry in the S&P 500 that is reporting earnings right now where the expectations are as strong and they're warranted. You're talking about overall for the industry, potential for 30% revenue growth. You can't find that anywhere else. In terms of positioning, you come into the quarter relatively light versus where we were on prior quarters. You're going to rebuild that. And then again, this industry benefited like none other with the relief that we have seen when it comes towards tariffs.
You know, it's always so interesting to me that when you talk about semis, when you talk about AI, Taiwan Semi is is not in the headline, yet they are the most involved in AI chips because they make them for all the companies you just mentioned. So to me, it's still an undervalued stock despite the move that it's had.
So you're probably right about that. It doesn't get probably the love that it does deserve.
I give it enough love, Scott.
You definitely do.
I do.
But I don't think there's much broad ownership. I don't think there's broad ownership on the show.
No, there is. I think I'm the only one.
Trillion-dollar company up 20+% year to date.
So what's the problem? Why is Weiss the only person who owns it? Is he really that brilliant?
Well, yes, absolutely yes. I've owned it for a long time, made a lot of money. People just they just go with the flow. They go with the crowd. NVIDIA, I love NVIDIA.
We'll take a break.
The people who have sold Visa tend to be really stupid. Now, I don't know how they did in their SATs or what schools they got into. It doesn't really matter. But I do think that this is another great quarter from Visa.
Well, that was Jim Cramer earlier this morning. After the report, stock is up 1%.
Where'd you go to school? We all know.
Jim Lebenthal, you sold Visa?
Yeah.
You didn't just trim Visa, you sold Visa.
Yeah.
Why did you do that?
Let me just start by saying there's no forever stock, okay? Doesn't matter whether it's Visa, Apple, Berkshire Hathaway, there is no forever stock.
Okay, that's fine. Go ahead.
All right,
Give him the floor. He gets the floor. Go ahead.
Listen, I'm not sure how much grief I should take for a stock that's done as well as this has done for as long as it's done. I'm selling high. I mean, that's all I'm doing here. You know, I'll just finish real quick. You're going to come back with plenty. I know.
have some stuff.
Yes, that you know I am raising cash. I have now raised cash with this sale in my equity accounts to 7%. That's the comfort level where I feel I'm not timing the markets, but I'm just waiting to put that back to work. You got to sell high to buy low. Look, it's a great company. I think it's fairly priced. I made my decision to move on because there is no forever stock.
Understood.
I don't remember my SATs. I don't.
That's fine.
And I think Jimmy's hilarious.
But the difficulty in all of this, now, it's very easy, obviously, to say, look, I had the stock for a long time. We just showed the stock chart. So obviously you made a lot of money in the name. The stock is not even back at its high, right? That's number one. You're selling it into what looks to be, and what I think Cramer's alluding to, is an uptrend in a name that continues to deliver. This is like Lieutenant Lebenthal.
Oh, man.
The submarine has done, it's cruising along.
How long did you think this analogy?
No, I just came up with this. It's heading into a little bit of, maybe enemy territory a little bit. Maybe there's some questions about the economy, the consumer, what have you, but you're still on the USS Lebenthal.
I considered all of that.
You did?
Not the naval analogy. I mean, that's a little.
Well, that's why I'm here.
A little tough to work with, but okay. I mean, look, no, I considered everything that you said, and I understand why Jimmy's saying what he's saying. Respect for it. Look, Joe said earlier, don't trade a quiet market. Granted, I'm violating all these rules. I want to raise some cash right now. I am now done raising cash.
You're done raising cash. You're not selling anything else. You're not trimming anything else.
That is correct.
You're just nervous that you're going to get a 5%, 7% correction?
No, not nervous. I'm excited for it. I'm excited for it.
Excited to sell a great name like that?
Give me some price dislocation. I mean, look, it's not. I made great money on it. I got to tell you the truth. It was always to me.
Look, if I had time,
always to me overpriced.
If I had time,
overpriced.
If I had time, I would tell Cramer to come down from his office, come down from your office, and I would tell him to come on the set.
But what are we going to do? He's going to say the same thing. I'm going to say the same thing.
Well, I know, but it'd be even better if he was here in person to lay it into you a little bit more.
I just need to remind you, Jimmy, I have mad respect for Philadelphia. Went to school in Philadelphia, and I was recruited into the Navy out of the vaunted Philadelphia Naval Recruiting District.
Everyone has a different process for exiting positions. I respect yours. If you're more rules-based, or if you're looking at things like profit margin and revenue growth, this company, it's staggering. I'm looking at it right now. Since 2016, they've only had annualized revenue growth below 10% once. That was during the pandemic. They have a profit margin of 72%. That's a cash cow. That's an unbelievable company. It's up 12%
Look, he
year to
made
date.
It's up 35% in a year.
Kramer
Bryn, I
doesn't
want to
have-
get Bryn's take, too, because we haven't heard from Bryn.
Kramer doesn't have the perspective of him. He just sees more opportunity, I'm guessing, the rest of his portfolio than Visa. Otherwise, you would have sold something else, right?
Hold on. Bryn,
Fair enough.
Bryn
That's
owns
fair
Visa,
enough.
too. What do you think, Bryn?
I think, well, first of all, I'm in camp Liebenthal on his process. So you should not fall in love with stocks forever. That being said, there are very, very, very few companies that have these kind of 65% operating margins. I think Joe was saying 70% profit margins. There's a duopoly, MasterCard and Visa. Visa's investing heavily into mining, into the crypto universe, into the blockchain, excuse me. And so I think there's companies like Costco, there's Visa, and there's just a few others that you can actually hold very long term because of the consistency of the revenue and the high margins. So it wouldn't be on my list to sell to raise cash. But Jim, to his point, if he can find another company, we'll see a year from now. But I would never question Jim's buy or sell reasons because he's a great investor.
Oh, man. Bryn's too nice.
Oh, man.
Thanks, Bryn.
It's giving me some breathing room on the desk. Thank you, Bryn. Thank you.
I should have stayed with Weiss.
You should have. I'm just not that nice, as we know.
All right, let's get the headlines. All right, welcome back. How about this? BCA Research today talks about crypto equities. It's our call of the day. They said you use pullbacks to build long-term positions, and they mentioned names like Circle, Coinbase, eToro, and Bryn's Robinhood. So Bryn, you own Robinhood. They're going to report today after the bell. That stock is up 422% in a year, which means Jim Lebenthal would have sold it a long time ago, obviously. What about you? What do you do?
Yeah, so I started buying the stock, I guess, in just maybe December of last year. The internet can tell me around in the 40s. And I think what's exciting is that Vlad and team have just continued to I think, clean everyone's clocks. They bought Bitstamp for $200 million. Their UI, their user interface is great. They just continue to evolve very quickly, the platform with technical charts, et cetera. They're going to have really good numbers. It's going to be a great call. That being said, I've had, over the last few months, probably half my position get called away because, as you know, I like to sell calls. There's a ton of premium. Because I do think at this level, a lot of great news is priced in. This company's here to stay. A lot of people are hoping it'll get put in the S&P at some time. It definitely qualifies. But I think when you have this company that's gone from, 40 in a year to 105, there does need to be some digestion. But from a platform, this company's here to stay. So I do think on weakness, this would be a good company to add to, but I would not be adding to it at 105 here.
Okay. I put some unfair zest on would have sold it a long time ago. Made up 400%. You know what I mean.
Boy, you are not
I didn't want to be unfair. I didn't want to be unfair any more than I already was. Weiss, you own the IBIT. What about the call itself? That you've had a undeniable sea change in not only the adoption of crypto-related assets, but the support in D.C. Of that. Time to load up a little bit on crypto-related equities?
I don't really look at the equities, so I don't look at the brokers or anything like that. They've done well, and they've outperformed in a number of cases the actual Bitcoin or Ethereum. I just think that the most cost-efficient way to play it is through IBIT, which I believe Bryn owns as well. So I do believe it'll continue to march higher, and should it ever find a use case, man, it's really going to go through the roof.
All right, still ahead. Final trades. What is yours?
Dell, strong momentum. Joe should own it. Strong fundamentals. Earnings don't come out to August 28th. I think the stock creeps up to its all-time high.
Joe?
TradeWeb. Strong momentum. We own it in the ETF. Excellent earnings report.
You don't want to own Dell?
When Bryn owns the ETF, I'll own Dell.
Oh, okay. That's a trade. That's a final trade. Farmer Jim.
Don't have to make it very hard. Alphabet.
Okay, and Steve Weiss.
Alphabet also, I was there first, by the way.
Okay, great stuff. Thanks, everybody. The exchange is now.
Hey, I'm George with Blue Cloud Trading, and it's Wednesday, July 30th, 7:02 p.m. as I'm recording this video. We're going to go over many of the stocks that they talked about on the halftime report earlier today. Not all of them, but a big chunk, as well as the index ETFs, some of the MAGA. I'm sorry, some of the Mag 7, some of the Mag 7 stocks, member requests, okay, as well as today we're going to get into the sectors. I think it's important because there's some changes happening here this week, today specifically in the sector. So I think that's really important we talk about that. Before we get started here, if you guys are interested in becoming a member, really easy to do so. Let me just show you guys how to do it. You just hit the subscribe button, then hit subscribe button plus button, and that will allow you the ability to join. So this little screen will pop up and you can become either a Blue Cloud supporter, a Blue Cloud trader if you want access to my additional videos that I post. And if you want to get daily updates on my trades, Blue Cloud Legend level membership is what you'd want to select. All right, let's get into the stocks. So the index ETFs today, real quick, as you can see here, they were basically just kind of going sideways most of the day, right? Waiting for that 2 p.m. Speech by the Fed Chairman Powell. And you can see how the market reacted. It dropped immediately, almost right around the time that he started talking. And then it dropped down to these levels and found some support here. And in the last, I suppose, 10 minutes or so, it did move up a bit. Same thing with the NASDAQ, which was up 0.15% actually for the day. S&P 500 down 0.12%, and the Russell was down the most, 0.51%. And let's look at the heat map real quick here. We're looking at the one-day performance. So you can see NVIDIA up 2.14%. Apple was down, Amazon was down, Tesla was down, Meta was down, and so was Google. But guess what? Since it's like I said, it's now 7:04 p.m. And if we take a look at the after hours and how these stocks performed, let's do that real quick. We'll select over here on the left, after hours performance. Let's see how they're doing. Oh, look at that! Isn't that interesting? Meta up 11.63% after their earnings announcement. Same thing with Microsoft, up 8.88%. NVIDIA's up 2.09 here. Amazon's up 3.08 after hours. So, but there's a lot of red out there. There's a lot of red out there, except the big Workload was up, like I said, 2.34. So we'll see what happens here. Let's take a look at the groups. Now, this is going to show us how the one-day performance has been for the sectors. And you can see utilities, technology, and communication services up. Basic materials got a big hit today, and so did real estate and energy. All right. Let's get into the index ETFs first. So we'll start off with the SPY. Here we are on the daily chart. Just want to make sure. Yeah, okay. So it closed down 0.13%, found support at the Tenkan-sen. Still a very strong uptrend in the SPY. The QQQ ETF up 0.13%, still holding up above Tenkan-sen and Kijun-sen. The Dow Jones ETF, DIA ETF, dropped down 0.39%, closing under the Tenkan-sen. That's the 9-period moving average right there, the green line. And we're using the Ichimoku indicator. So overall, we do have a strong trend here in all these index ETFs that you see. Prices above the moving, has been above the moving averages, above the Ichimoku cloud, above the 200-day moving average right there. But right now, there's a little bit of weakness these last 3 days. You can see the red candles there. Russell 2000 also for the second day now, staying under the Tenkan-sen, down 0.51% today on higher volume. A negative crossover occurred right here too. The VIX is still in healthy levels here at 15.48. But we could potentially see another spike coming up this week on August 1st when we get when we get that information about what's going to happen with tariffs. This is what happened last time. So history does have a tendency to repeat itself. And if the information that comes out regarding, how things settle as far as the tariffs go, that could have a huge impact on the market, and we could see a lot of volatility coming right back into this market, and it could start on August 1st. And it's just, just a little bit of caution is what I'm saying that we should all have here. I'm starting to reduce positions a little bit in my portfolio, just in preparation, Anyway, let's keep going here. So FEZ is the Eurostoxx ETF, the Eurostoxx 50. This one now, as you can see here, actually now it's under, not just under the Tenkan-sen, the 9-period, but it's also under the 26, the red line, but finding support at the cloud. I think, again, once we get some information on August 1st, this will either tank or it will pop. And so that's what what we want to wait for, really. IBIT still in a steady little downtrend here, but it could be setting up like a bull flag type scenario here. Okay, so we could see something bullish coming out of Bitcoin if it can break through that trend line. All right, let's go to the next segment here. Now, these are the stocks and ETFs that some of them, not all of them. There are some stocks and ETFs discussed that are in the portfolio that I manage, and so consider becoming a member so you can access analysis on those too. SMH, Semiconductor ETF. Here is the daily chart, and it is strong. It's up 1.15%, looking very bullish. Dell Technologies, up just 0.02%. I've got this one also flagged with a little blue flag, meaning it's very technically strong on both the daily and the weekly chart. In fact, Dell it looks like this is the first, I'm sorry, I take that back, the third week now where it's holding up above the Ichimoku cloud on the weekly chart. So this is, I'm seeing potential here for Dell. This is the earliest stages where it's breaking through. We've got all the elements of Ichimoku telling us, the indicator that we're using here, telling us that this is starting to become really bullish. Here's the Senko Span A crossing above the Senko Span B, the purple line. We've got price above the cloud. We've got the faster moving average, the green line, the Tenkan-sen above the Kijun-sen. Okay, so this is all good. The question is, and this is the weekly chart. Now here's a daily, very bullish trend. All right, next earnings August 28th. So you have some time here, but it looks good. I like it. TER, Teradyne, up 18.88%, but basically formed a spinning top, which is a reversal candle by the end of the day. This is what it looked like in the trading throughout the day. 5-minute chart went up and just kind of went sideways. It just basically reached that level here of a 107.73 and stayed there. QCOM, here it is on the daily chart. Yes, it's above the moving averages. It's above the 200-day. However, if you look at the weekly chart, still under the cloud, and it's finding resistance right there. You can see the type of candle that was formed once it came close to the top of the cloud there. Robinhood, on the weekly chart, very bullish. Okay, and on the daily chart, I actually had a position in this. I did close out of it back on July 22nd here, but has not really moved much since that point. As you can see here, it's still holding under the Tenkan-sen. Now today, that's right, Robinhood did come out with earnings. Okay, so let's find out after hours. This is the post-market button here. I'm going to press. Let's see what it looks like after hours. Okay, interesting. So it ended up dropping some more. If we look at the 5-minute chart, you can see that initially it did spike and then it started to decline. So what happens is when the earnings come out, sometimes it looks optimistic at first and then they process the information and you can see the price, and they're not really liking what they're seeing apparently, because if they were, you'd probably see on the 5-minute chart this improving, not declining as it is right now. And you can see that down here with the directional movement index. So that's kind of concerning. It's also creating what looks to be like a shooting star type candle in real time right now, as I mentioned, because it is 7:13 p.m. and this is the after hours button that I just clicked on. So let's go back to where it closed. There it was when it were closed. All right, next, TradeWeb, Markets Inc. Check this out. So this one had a nice move today, up 5.65%, but look where it stalled at these prior highs right there. Notice how it stalled there. Here's the high of that candle. So as long as it's either under this little box that you see here, or the top of this box or the bottom, I'd stay out of this for the time being, because it's more than likely to pull back. There's no evidence here that this is going to continue moving up. Let's look at the weekly chart on this too. On the weekly, doesn't look terrible actually. All right, maybe I'm wrong on this one, because what I'm seeing right now also on the weekly chart is something else. Check this out. So if we take that right there, draw a nice little trend line from that peak. Okay, and that peak right there of that candle, you can see how it stalled right there. It did in fact break through that trend line. So we might see something happening. It happened on higher volume. and the positive DI is above the negative DI, and ADX is moving up. So maybe there's something here. That is a weekly chart. We'll know for sure, of course, on Friday, because this candle is still forming. By Friday, this candle could certainly just come right back under that trend line. So that's why I'd wait basically until Friday, probably, if you were thinking about buying that stock. Okay, let's look at Meta. Here it is on the daily chart, under the Tengen-sen, under the Kijun-sen. This is what it looked like at the close. But remember, Meta also came out with earnings today. So let's look and see how it performed after hours. And this is a big jump. There it is, up 10.86%, popped. Here's the 5-minute chart. So you can see right around after 4 p.m. how it just boom. So yeah, Wall Street apparently liked the information there. Here's a list, by the way, guys, if you want to check this out. This is a list of the stocks. Okay, here we are. So it was Meta, Microsoft, Robinhood, Carvana, Qualcomm, Kinross, Ford, ARM. These are some of the big name stocks that came out with their earnings releases after hours. Tomorrow it's going to be CVS in the morning. Well, not morning, but yeah, before the open. You can see the companies right there. MasterCard will be Norwegian Cruise Line. And then after the close, it will be Roku, Cloudflare, Coinbase, Amazon, Apple, some big names. So that should be interesting too. Okay, let's get back to the charts. Apple, here it is in the 5-minute. Let's look at the daily. So on the daily chart, it has pulled back to the 208.42 level. Nothing really to do here because on the weekly chart, it's still under the Ichimoku cloud for Apple. Again, maybe the earnings announcement will be really positive, but it could also be negative. And if it is, expect it to drop onto these moving averages, maybe even under the 200. It could spike down. Tesla is still inside the Ichimoku cloud. A lot of indecision here between the buyers and the sellers. You can see that it's kind of building this like symmetrical triangle type situation. So that tells us that as it's getting squeezed in here, we don't have any true direction for Tesla. Therefore, I'd stay out of that one. And here it is on the daily chart. Okay. What about one of our members' requests? It's called Estee Lauder Companies. Okay. EL is the ticker symbol. Very strong uptrend. Very strong uptrend on the daily time frame. Here it is on the weekly chart. Currently inside the cloud. Now, this is a good sign, though. What's happening right now with Estee Lauder is, okay, it's broken into the cloud. That is one of the first things that's going to happen prior to breaking above the cloud, which is what I generally look for before considering an entry. But what some other things that are happening that are positive, if you look at this chart, the weekly chart, it's taking out these highs. Do you see that right there? So we've got that base building, and it looks like it's moving up further. I could certainly see it hitting, the top of the cloud now, but since it's inside. Okay, there's not a lot of, resistance up here. Okay, at these levels until you reach that level, and that's about. Let's find out. It's about 17% away. Look at this. If I measure right to that top of the cloud right there, that's about almost 17% to reach that level. So I wouldn't be surprised to see that happening. But yeah, it's just, the profit margins don't look that great here, negative 5.89%. They might be improving, however. Let's do this. Let's take a quick look at the profit margins. Let's find out if they have been improving. We'll go to into FinViz real quick. We'll type in EL and let's minimize that a little right there. Okay, and let's go down to the statements right here. And let's look at the net margins. And yes, they are improving. That's good. So you can see this histogram here. See the negative back in 2024, and here we are, in 2025, and it is it's bullish. It's blue, which means it's positive. Okay. And if we look at, let's see, the price to sales ratio has also been declining, which is good. It makes it a cheaper stock to own, as you can see right there. Price to sales dropped down to 1.6. The market cap has increased. Gross margin about the same. And how are they doing with free cash flow? Let's find out. All right, free cash flow. It's in the positive. It is okay, so there it is, free cash flow. It is in the positive, but not as much as it was back on December 31st, 2024. Anyway, I do overall like it. I would not be recommending an entry until, however, but then I'm a conservative type trader until it gets above the Ichimoku cloud. But that's quite a distance. Like I said, it's almost 18% away. If you're looking for a short trade here, that's not a bad idea. That you could certainly try that and just trade it on the daily, monitor that, maybe use the 2-hour time frame as well. You can see the nice strong uptrend that this stock has been in for a little while. All right, let's take a look at the sectors very briefly here. XLK is technology. Let's go to the daily here, and we got to do the regular hours. So that's where it was at the close. But after hours, XLK is actually moving up. Okay. So technology still very strong. ETF, XLK, XLU also, same thing. Now it did create a shooting star. Let's look at the post market on this one. I'm just curious. Ooh, see that? It got worse. So that's utilities. It is still technically sound, but it's just showing some weakness after hours. SMH, here it is, where it closed, up 1.15%. Still a very strong uptrend on the semiconductor ETF. XLB has dropped these last couple of days, okay? A little bit of weakness, but holding up above the 200. Copper also dropped under this prior low. It's now going to find support at the cloud as the copper miners ETF. This is not what you want to see. This is what appears to be a double top type scenario here. Okay, you can see right there. And the fact that it broke through and closed under that level, that's showing weakness here. It has potential because we've got the 200 weight right here in the cloud to sort of as another level of support, but certainly wouldn't be adding a new position here in this one. It's more about managing the trade at this point. GDX, Gold Miners ETF, is also just kind of still stuck in this box. I just keep extending it out, and you can see it's just consolidating. So there's nothing really happening with the gold miners right now. Bitcoin also kind of doing the same thing. Okay, it's at 117,000. You can see it just going sideways. XLC, same thing, but under the moving averages. That's communication services. IBIT is the ETF. That one's also kind of sideways right there. GLD, same thing, gold. Real estate, holding up above the 200, but dropped back under the 9 period here. It's just consolidating too. Oil K, which is the ProShares K1 Free Crude Oil Strategy ETF on the daily chart. Looks very bullish. Let me show you what I mean. We've got a bullish cloud here. We've got price above the moving averages. The faster one, the green line, is above the red. You can see that right there. Price is above the 200. ADX is moving up, and the positive DI is above the negative DI. All of that tells me this is very bullish. And I expected that it will, in the short term, move up. However, if we look at the weekly chart, it has, it's a little bit, it's very, very close to this level of resistance right here. The cloud, it's about 1.5% away from it. So I would not recommend adding a position here. XLY is looking strong on the weekly chart. Here you can see it's above the cloud for a bit. The Chiku span is still underpriced. That's the closing price right there, that white line. So the closing price projected 26 periods ago right there is not quite bullish yet. And the future cloud is, though. Here's the daily chart for consumer discretionary. Healthcare going sideways. Nothing major happening here with healthcare on the daily chart. XLP, same thing. I would not be touching this one. Industrials showing weakness today. Check it out. We've been above both moving averages here since this date right here, back on June 23rd. And industrials for the first time dropped and closed under the Tenkan, down 0.49%. How is it doing now after hours? Let's find out. I am curious about that. Drop some more. So you see, it's showing a little bit of weakness. It's a little bit of a concern that industrial is one of the strongest sectors, is now starting to show 3 days in a row here, price dropping. It does not mean that this trend is over. It certainly could bounce right here. I'm just saying, be cautious. That's all. This is not a time to add a position based on what I'm seeing here. Financials, same thing. Showing weakness these last 3 days. Finding support at the Kijinsen. Energy dropped also today, down 1.63%. On the weekly chart, it's still under the cloud. No on that. XHB is under the cloud still on the weekly, so no on that one. Here it is in the daily, showing weakness. So again, this is a perfect example, guys, of like why I preach about using 2 time frames and not just one. If you look at the weekly here on the XHB, it's under the Ichimoku cloud, right? Okay, so that's showing a lot of weakness still, or resistance at least right there. And if you look at the daily chart, it was looking very bullish. So you can get 2 different signals, but as you can see, in price had gotten above the 200-day moving average, and it was above the moving averages here. Everything was looking beautiful, but what we don't know is the fact that on a weekly chart, price was right there at that resistance level. That's why it's a good idea to look at both time frames. And let's look at GDXJ, Junior Gold Miners ETF. This one also dropped this week a little bit, finding some support there at 64.92. Here's a daily chart based on that low. So it is, at least at a minimum, finding support. And what's interesting about this level here, if you go back in time, you'll notice how it was respected many times, like right there, right there. Once it broke it, you can see what happened. Okay, so that's interesting to me. So I would, it's a level to definitely watch for with 64 with GDXJ 64.92 level. All right, that's gonna do it for this video, guys. Thanks for watching. If you guys like the software that I'm using here, it's called TC2000, and you can get it very easily by clicking on the 9 more links right here on my homepage on YouTube. Scroll down and then select the $25 coupon from this link. Once you've done that, you enter your email, you download the software. Here's the pricing for you if you like the software that I'm using. I use the Platinum, but the Gold is really good to start off with. Okay, it's $30 a month, but you get that $25 coupon if you haven't used the service in the last 12 months. So anyway, that's going to do it for this video. Thanks for watching. Thanks for supporting the channel. Don't forget to hit the like button, and maybe make a comment. Share this video with someone that you know that might be interested in, learning a little bit more about trading. All right, guys, thanks.